Hi traders, good evening. Well, this is the 6th of March 2020. It's a Friday, and we had another big gap down today of close to 300 points for the Nifty, and definitely the pain is getting worse. Now, like always, when the market goes through a serious correction, like you can see on my charts, this is the daily time frame of the Nifty back to the levels where we were during September 2019. Now, during these kind of serious falls, and if you had been associated with me in any programs before, I have this joke which I say that my erstwhile trainees remember me the most when the market crashes, because they probably don't know what to do now, and they seek advice. Is it gonna go further down? What should we do? And yes, it's a fact, I do tend to get the maximum number of WhatsApps, messages and emails as well as phone calls when the market shifts on the bear side. So I thought that it will be back of your mind whether you are actively there in the stock market or passively. What should we do now, or what are the things we should do now that the stock market has crashed, or maybe this might be the tip of a serious bear market. So I quickly took this opportunity to make a video for you, and I could think of 4 important pointers, though there are many sub pointers, but 4 key points to do when the stock market crashes. The first one is, you should remember one thing, that bear markets or downtrending markets are far more volatile than uptrending markets. When a stock market is in an uptrend, it's a steady, low volatile. However, when the market is in a downtrend, it's an extremely volatile market. It falls, gap downs, it bounces back really sharp. The economy tries to bounce back. The governments, the banks, the reserve banks, feds, etc., the key authorities take positions like short sell is not allowed, can be a rate cut. So they take measures to support the index. They take measures to support the market, the falling market. And these measures may or may not be fruitful for a medium to long term perspective, but for a short term perspective, they generally lead to a sharp bounce back. So bottom line is this, that uptrending markets are steady, low volatile. Downtrending markets are not steady, they are volatile. So when you know that I am in a volatile zone now, as a trader, if you are a trader, I would suggest a couple of things that you should do. One is, you should try and trade as less as possible. Try and do those trades only where you have the maximum conviction. In fact, in our mentorship trader community, we've been trading very less. The trade setups that we have are not getting triggered, or even if they are, we are coming out of these trades as soon as possible because we want to trade less. And also, the second pointer is, make sure your risk per trade is very well defined. Okay, so do not take random trades, because if you find yourself on the other side of the market, then either on the downside or on the upside, it can drag you so much that one single trade can really give you a lot of pain. So please try and be as much disciplined as possible. Better trade lesser trades, better trades. Focus to get out of the trades as soon as possible. So I would say that if you are a trader, focus more on short-term positions, because you don't know tomorrow, is it going to be a gap up or a gap down? Is today evening RBI or the Fed can come out with some news or announcements. So make sure that you do short-term trades, unless you are doing in options, especially on the buy side, you know that your downside is capped. So bottom line is this, that out of 12 months in a year, okay, there will be a slack period. There will be a period when you have to step back, where you have to tell yourself, this is not the right time. Uh, if you're an Indian and you're watching this video, I can make an assumption that you love cricket, or even if you don't like or love cricket, you understand cricket more than the players who play on the field. So you would know that you cannot hit each and every single delivery out of the boundary for a 4 or a 6. You need to play according to the merit of the delivery. You need to play according to merit of the runs that you're chasing or the runs that you're looking to create, the pitch, the field, etc. There are multiple parameters. You know this more than me. So similarly, if you look at 12 months in a year, as a trader, you have to give yourself, okay, this is not the best of times to be really braveheart. We will see in my few other points where you can show some courage, some boldness, but not in a trading perspective. So the bear markets are far more volatile. So please keep your trades limited, trade less. Please stay disciplined and define your risk per trade as much as possible. And it's better that you keep your trades short term. You'd like to go back and come back again tomorrow with a fresh slate. Second point that you should look into now that the markets have crashed is, if you're again a trader, I'm purely talking from a trading perspective, point number 2 and point number 1 is look to sell on a rise and don't sell breakdowns. What do I mean by this is, if the markets have now moved into a downtrend, you rather wait for the market to bounce back and you look to sell somewhere here and anticipate that the market's going to fall further down, rather than selling here. That is the breakdown. Don't do this. It's always better, these setups, selling on a rise, we call this in our mentorship program, we call them the swing trading setups. And if you are a mentorship trader, you exactly know what I'm saying. If you're not, or if you know any one of us, you can talk and you'll find that we are really good in doing this. We patiently wait for the setup to play out and then we trade them with a very high degree of accuracy. Why I am requesting you not to go for breakdowns is these are all panic traps. Not all, majority of them are panic traps. So a well-defined low has been created. The entire street, the media, the analysts, the researchers, everyone will look at this low. The low will get broken and everyone will become bearish. Margin calls will start to happen. The brokers will sell the positions of their clients who cannot pay the margins. It will create a situation where it will lead to a lot of selling in a thirst. And that's where it can lead to a trap. And that's where, the markets can reverse. Not necessarily all the time, but it's a very high potent zone for these kind of traps. So I would always suggest, please always look to sell on a rise in a bear market and not on the breakdown. Number 1. Number 2, if you're trading the breakdown, you would see that the candles which break down are generally very wide, that is lengthwise they're pretty long. So your entry point and your stop loss will be pretty wide, so your risk per trade will be pretty high. On the other hand, if you wait for the bounce back and sell, the chances are very high that your stop losses will be very small. Considering it's a volatile market, considering you don't know which way the market will swing, you would like to take as less risk as possible. Sell on a rise is a better option than to sell on breakdowns. Point number 1 and point number 2 are both from the perspective of a trader. Now, taking you to point number 3 is focus on long-term portfolio. Now, of course, this is for the trader, considering that he is looking to make some active source of income from the market. And I'm sure every trader has a long-term portfolio also. If you're not a trader, you are a professional, you are working, you have a business, and you're serious about your money. You want your money to grow more than what the FD or the bank account, savings bank account gives you. I'm quite sure that you'll have a passive source of income, and for that, equity is the best asset class. So now this is the time that you should start focusing on your long-term portfolio. Now this long-term portfolio of yours can be of, let's say, I can break it down into 2 parts. It can be a direct portfolio. By direct portfolio, I mean you have a portfolio with yourself. You have bought these stocks based on recommendations or your own understanding, which is there in your own DP. or they can be mutual funds, SIPs or lump sum mutual funds on various different funds like large cap, mid caps, mixed, arbitrage, etc., etc. This is your long-term portfolio which you're accumulating. A long-term portfolio, I see it as a wealth creating option. Trading is more about money creating action. Wealth creating action is more about long-term portfolio. Now let's talk about direct portfolio. You start looking at quality stocks. In fact, before I would say quality stocks, let me take it to point number 2. I would say you should start looking at the Nifty PE, which you should do periodically. You know this, I think I've managed to bring this website. I've saved it for you, niftyperatio.com. I don't know if you know this, that the inverse correlation between the price of Nifty and the Nifty PE. I've checked these values with the NSE website. They seem to be perfect. Let me break this down a little bit for you if you not already get it. This tealish color thing is the value of Nifty, and is the value of Nifty PE, and this red line is the value of Nifty, benchmark Nifty. The mean line is around 20 level. The 20 is the value of Nifty PE, and on the right hand side axis is what just happened. Okay, on the right hand side we've got the value of Nifty. Now you will notice that on this graph that I have since 2001, from the mean towards the two standard deviation, it has gone couple of times, and recently also it was above the 2 standard deviation. This means that the Nifty is overheated, which has been the case recently since September 2018, then a bit of in 28 Feb, and recently now also, as you can see, that the Nifty PE values have been above the level of around 28, which is 2 standard deviation. Now, if you look at the last bear market, it was also close to 28, it was 28.22. It broke the 1 standard deviation, it came down to the mean, found some support, broke the mean, went till 1 standard deviation below the mean, and then it fell below the 2 standard deviation. These are jackpots. This is where you found it at the least, I think around what, 11? Yeah, 10. So we don't know where we are going now. Where are we right now? We're at 25. Looking at the behavior, it seems like it is all poised to come close to this kind of levels from where it has bounced back twice in March 2018 and October 2018. This is the value of around 24, 25. So it means that the Nifty has some pain left in it. It can break the 24 value and go all the way down. So what I'm requesting you for a long-term investor is keep a look at this, this PE value. Okay, if it comes close to the mean, which is around 20 now, this one, then you should definitely start to accumulate stocks, high quality stocks. By high quality stocks, I mean you should have a list ready. It should be a mix of blue chip stocks from the Nifty 50 universe and also probably good quality stocks from the Nifty 200. Something that you should do, I would recommend you to do, will be let's say you keep an eye on the delivery percentage. All right, so I have this on the Iris Plus software. I just pulled out which are the stocks which had the highest delivery percentage yesterday. This was 5th of March, 4th of March, 3rd of March. And let's say I put it 50% to 75% and I say process. 52%, it ideally should not come because I have given it 75% as the maximum, but yeah. So there are few numbers like 77%, 65%. I don't know why 65% is coming when I'm telling them that delivery percentage should be between 50 to 70. Okay, sorry. So I am very sorry. At times I become really dumb. Let's say 75 and 100. It is because of another sum. Now this is better. So you can see that within the Nifty 200, AU Bank is something which is showing a good delivery percentage, 75, 85, 60, 65, 69, 73 over the last 10 days. Dalmia Bharat, Imami, Godrej Property. So you'll get some stocks, all right? Now, the fact that just because it is high on delivery need not mean that a lot of support is there and the stock is going to bounce back. It's just that you need to just keep an eye on within your universe. You would like to know SBI Life, all right? This is one stock which has been rallying really well. And if you know charts, you know that 850 was the resistance from where it got the breakout. So 850, 830 should act as a support. Now, close to these levels, I can see 75, 66, 66, 71, 74. Not bad. A decent amount of delivery percentage is shaping up. So this is one parameter with which you have to figure out whether the supports are holding or not. And then based on that, you can accumulate your good quality stocks. I had created a video on delivery percentage before. I'll share the link in the description box, which talks about the myth of delivery percentage. But this is one way you can track the list of your stocks, that what is happening within my, let's say, 100 stocks or 200 stocks. This is the support of my stock, and do I see delivery percentage picking up? Do I see signs of a reversal coming up? And then you can start accumulating them. Keeping in mind it's a downtrending market, keeping in mind it's a downtrend, it's a bear market. If it falls further down, I will add some more. So that's the direct portfolio part. And coming to the mutual fund part, you should be now little cautious about if 100% is the pie, then what is the percentage you have under debt? What is the percentage you have under equity? Is there anything under commodity, etc.? So I would always suggest that keep your equity exposure within 30 to 40% because they are high risk asset class, right? They go up fast, they come down also fast. Around, I would say this is a very rough number. I will share with you details of this. Around 9 to 10%, I would definitely say you should keep in gold. And the rest you can keep in various debt instruments, short-term, medium-term and long-term mix of both. There are very many debt mutual funds that you can look into. This aspect of portfolio management that I just spoke about, the mutual funds, I will personally be coming out with a lot of videos, information, content, which I've not done before. Because I strongly believe that becoming a successful trader is possible once we know what to do and do it in a dedicated manner. Is possible, but one should also keep a focus on your long-term portfolio. I have noticed this, that majority of us will tend to have your mutual fund portfolio heavy on equity, and this time with this fall, all the gains that you saw in the last 6 to 7, 8, 9 months, a lot of it would have got eroded. So please focus on that and find some good funds which you can accumulate and start some SIPs also there, because you will be getting at a very good price. Fourth, stay calm, don't panic. All right. So be greedy. So greed and fear, you would know, are the two main emotions which drive the market, right? And a beautiful say of Mr. Warren Buffett, as you always know, that be greedy when the market is fearful and be fearful when the market is greedy. So don't panic, stay calm. If you don't create a lot of derivative positions, you will not be too much worried. Stay calm. It's a phase which will pass. These phases can take weeks to months to probably a year, year and a half. But it's important that we all stay calm. And if everyone is in a tough situation and you are sitting on some good cash, this is an opportunity. Having said this, these opportunities can come now, and this fall can double itself and fall another 1,000 points on the downside. That too will stay as an opportunity. The important thing for us is, are we calm at this 1,000-point fall, and are we going to stay even calm when the next 1,000-point fall comes later, which we don't know, may or may not. So please stay calm, focus on your long-term portfolio now. This is not the best of time to be aggressively trading into the market unless the market settles down in a nice bear market. It's not settled into a nice bear market as of now. It's still extremely volatile because that's the nature of the market. So please keep these 4 points in mind and do share. If there are any other points that you want to add on, please feel free to comment. And I hope this video finds some usefulness, especially after today's or this week's or 2 weeks fall in the market. You would have seen your portfolio coming down. Nevertheless, the fourth point is the most important, without which the rest of the points won't work. Please stay calm and don't panic. Till then, Saturday, Sunday, enjoy your weekend. That's also equally important. Take care of yourself. Thank you for watching my video.